So, what would be some objectives and reasons why a person would want to know more about portfolio management?
One of the reasons why someone would want to know more about portfolio management is because it makes you more profitable. Mm-hmm. Because the more you know about what your money, where your money is and what it's doing and what it's not doing, then you can make changes to make it more profitable.
Right. Profitability, capital appreciation.
Right. Yes. So for tax reasons, you might want to hold on to an asset for a year so that you can get so that when you do cash it out or whatever, then you only pay long-term capital gains as opposed to short-term capital gains.
Right, because there's a tax penalty otherwise.
Yep.
Yes. Good point. Let's see what else. So you obviously want to maximize your returns on your investments.
Yep.
You want to risk optimize your portfolio.
Yep.
So that you can be aware of downward trends immediately and not, because they do happen.
Right. I mean, because I could have set up something in my IRA, my self-directed IRA, and it's going great. Like, oh, those cannabis stocks were booming, during the last half of 2021, but now they're slumping.
Right.
Should I reallocate? Should I sell them and put them into something that's, more lucrative now?
Oh boy, that's a whole topic, that we could really explore, stock by stock. So many case scenarios of that happening.
Yeah.
Throughout COVID.
Yes.
Even happening with crypto, with certain coins, as we know. Yes. Hallelujah to a few coins during COVID, Not everybody took advantage of that option and opportunity during that weak point in our society. I did. I know you did.
Yeah.
And maybe some of our viewers and listeners are thinking more so along those lines, like, what if another emergency happens? I need to have another, skill set, so I need to expand my curiosity or my skill set, within my portfolio, make it grow, be less of an amateur,
Learning new skills is always great.
Yes, so that would be an objective, obviously, and to make money, we all know this, and also to ensure flexibility within your portfolio. As you mentioned, being able to move different things around and anticipate, positive and negative, though. How might the process of portfolio management look like? Because when you started talking about all of your and I know you and all your fancy spreadsheets and this and that and the doohickeys and the drive this and all this other stuff, not everybody is all that proficient, with their management.
True, and then it could use something like this.
Right. So, so let's talk about how simple versus how complex, or what the different forms of the process might look like. You can make it as complex or as simple as you want, depending upon your proficiency level, as far as being an investor.
Yeah, there's a whiteboard approach.
Uh-huh.
I always used to like to, put everything up on the whiteboard,
Yes.
because then I could sit back and I could look at it and I could,
Yeah. Like a beautiful mind.
Yes, yeah, like a beautiful mind,
Great of trading. It's wonderful. I live that. Yes.
But the only thing about that is that, it's not portable.
No. And nobody else can make any sense of it.
Right.
Except for your crazy trading mind. And even if anybody had to lay hands on your complex system, it would take a team of us to decipher it all. It'd be like the Shirley hieroglyphics, of us trying to figure it out. But if we follow kind of an 8-step process, you know, of portfolio management, I think that we could wrap our brains around the concept, you know, from a more simplistic
Okay.
system, you know, and then once we are as, I don't know how I would describe you, so tech savvy, you know, it's just in your blood. But for the rest of us, step one, we need to identify your objectives. And so you would reduce that to writing,
Right.
you know, in whatever fashion, whatever form that you want that to be. It could be a notebook, could be your whatever device that you want to use. Step 2. You want to estimate your capital market. So you want to try to just get a bird's eye view of whatever you're going to dabble in.
Right.
You know, and structure that in writing in some loose form, you know, in buckets or categories. As you know, I like to look at it. Like maybe it could just be a pie chart,
Okay.
you know, like maybe you just draw a nice simple visual aid and you say this person, just like a financial advisor or a financial counselor would do for you. You know, they would say, okay, you want to put 10% of your monies into this category each month or each paycheck, whatever. However you want to structure it. You know, you can have a certain amount of money that's coming from 1, 2, 3, 7, 10 different sources, you know. But you want to try to look at that market, you know, that you want to dabble in.
So, just so I have it straight, and so that our listeners
Okay.
are clear.
Okay.
So that would be like, all right, I'm allocating like $100, be it a month or a week or whatever. So I got this $100
Okay.
per time period, and then I'm gonna say, all right, I'm gonna take like half of this $100 and I'm going to put it into crypto,
Okay.
and then I'm gonna take like 40%, and I'm gonna put it into stocks,
Okay.
and then I might take like 10%
Okay.
and have some wild hair, and I'm gonna go into the forex market.
Oh, well, good luck with that.
Yeah, yeah.
It's 10%, you know.
Because that's high risk, you know.
Yeah.
You know, so I'm 10%, you know.
Okay, so your pie graph would look very simple. It would look like 50%,
Right.
$50 goes
Right.
to this category, $40, 40% goes to this category, and the little 10% goes to your high risk category.
Right.
You know, $10.
Yeah.
Yeah, that's a simple way. And then, of course, you know what we want is to add zeros.
Right.
And repeat the same process and concepts, just add zeros.
Rinse and repeat.
There you go. Step 3. You want to make decisions about your asset allocation. So you kind of helped us with that in your example that you gave us earlier. But other decisions might be what as far as the asset allocation?
Okay, so now that I got so I'm going to say 50% in
Crypto.
in crypto. So I might say 50% of that I might put in Bitcoin,
Okay.
you know. And then I might say, okay, well, then the rest of it is going to be in some other type of altcoin, because an altcoin is anything that is not Bitcoin. And so I'll say, okay, well, I'm going to put like 20% into Cardano, and then I'll put like the rest of it in like various other ones.
Don't tell all your secrets. Okay.
And then, of my 40% allocation for stocks, I might put like, half of that into like dividend stocks, long-term stocks that's going to provide me dividends,
Yes.
And then have the dividends reinvest.
Yes.
And then, so then that would give me, the rest of it to play with as I will. So I say, so maybe out of this, I'm going to be willy-nilly because I have another source, not from this $100 periodically, that's going into my retirement fund, so I don't have to
Right.
worry about that. So I'm going to be willy-nilly and wild and reckless with this
Excess.
part of the pie.
Right, exactly. That's a good way to look at it and structure it
Yes.
mentally, Step 4. Formulate suitable portfolio strategies. There's so many strategies. You've helped us to strategize in your case scenario examples, so much as it is. I think that there's so many strategies that this episode would be exceedingly lengthy.
Right, yeah,
If
because
we were to really break down every possible strategy. As we've already talked about, there's strategies for Forex, there's strategies for crypto, there's strategies for stocks, there's strategies for dividends, stocks versus, ETFs, all kinds of different strategies within every category and subcategory that you can possibly imagine. So the idea is just to be aware of different strategies that you can implement within your pie chart category. Step 5. Select profitable investment examples and also securities for your portfolio. So here we go with actually selecting finitely, reducing to writing, I want, or I have this in crypto. I have these in your stocks. I have this, and this in your Forex, for your example.
right.
Right.
Yeah, and putting it down in writing is so important because, you can verbalize it, you can talk to people about it, but when you put it down in writing, it's the first step of fully bringing it into reality is the writing it down.
Absolutely, and in a sense, it's your own goal setting in front of your face that you can put a timeline on. You can manage, you can update it. It has benchmarks. You can check them off, you can feel successful, and you can be accountable to your own portfolio rather than just to, be one of those people that sinks, oh, I put $4,000 into whatever and I let it sit there and it just drained and I just have nothing. Like, okay, well, that was on you for, number one, putting all of your eggs into one basket and then just leaving the basket and not even caring.
Right,
to
you
the
abandoned
other side
that
of the
basket.
street. All right.
Right,
Seriously, you just left it. But that's on you. Don't be that guy. Seems to always be a guy, too.
Yeah.
That I hear that story from. Femme Finance. Step 6. Implement your portfolio. So now the first 5 steps are you wrapping your brain around it in writing and structuring your game plan. And now you're in the game on step 5 or step 6. Sorry. What would that implementation be? It would be actually setting up accounts. It would be putting money into things. It would be setting up a recurring, weekly or monthly, draw of money to put into your 50% crypto, your 40% stocks, or your 10% Forex in your example.
Yes, I I like to set up the automatic deposits where maybe it's only $20 a week, that I have come out of my checking account and go straight to the exchange, so that, maybe I don't trade that right away. Maybe I just, I'm waiting, until I have like, $200 or $300 or whatever, before I implement, that strategy that, of buying whatever asset or security that I, wrote down that I wanted to buy to implement my plan.
Right. And now we're at step 7. So you want to evaluate and revise your portfolio. So now you've got it rocking and rolling, and you want to change some things around, as time goes on. And that time could be a short period of time. You could realize that, you selected a couple bad crypto coins,
Yeah.
And you see it dwindling very quickly, or there's something that happens within, our society or our government, or, something that happens to where you need to immediately, move some things around.
I have done some stuff where I had, was doing like monthly rebalancing, but now I'm starting to think, well, I think that weekly might be a better call, even though,
totally agree.
I might have to pay additional fees, trading fees or whatever, but that's also better than losing money,
Yes.
so it kind of balances out. So I think I might err on the side of more attention.
So increasing your level right now of your portfolio management.
Right. Yes.
And that can change. Different factors come into play. Our last step 8 would be exactly what you just started talking about, which is rebalancing the composition of your portfolio should the need arise.
Right.
In whatever form.
Yes.
So to recap, portfolio management there's a lot that goes with it.
Yes.
And so to have a written plan will help you in centralizing your portfolio data, because you will, over time, have a lot of data to work with.
Yes.
Within your portfolio. What happens? Can you speak on, with your fancy spreadsheets and bells and whistles and doohickey, for the rest of us who may lack such an automated, tech-savvy approach to portfolio management, how can we simplify what you do if we're just starting off?
I just get a sheet of paper.
Okay.
I get a sheet of paper and I write down what assets do I have. I write down the name of the asset, the symbol of the asset. I write down how much of the asset I have. I write down where it is located. And then someplace else, or I might write down what I intend to do with it. What are my goals for it? Do I intend to sell it at a certain price or whatever, and so that I can come back to that later. And it's also great for historical reasons. 10 years from now I can look back and say, oh, look,
Look where I came from.
Yeah.
Exactly. Shirley, I feel like our viewers and listeners would agree that we have offered some diverse portfolio management options. Would you?
I do.
Okay, good.
And thank you for joining us today. And I hope that you have a great day. And don't forget to hit the like and subscribe button.
Yes. We will see you next week with our next topic. Have a good week.
Bye.
Bye.